Good morning, good afternoon. Welcome. If you weren't with us from the start off, you have missed a fabulous, very entertaining and informative debate on CBDC, digital currency, who needs it, what are the benefits and the drawbacks. But if you have time, well worth catching it on the Banque de France website where it will be available. And we are now moving on to our second panel. Please could I ask, if you're not going to be speaking, to mute your microphones and your video cameras, please. Otherwise, we start to get bandwidth and echo issues. Our first panel, as I say, dealt with the benefits and otherwise of digital currencies. Our panel kind of assumes that central bank digital and other digital currencies get up and running, and ask, how do we deal with cross-border issues and the details of multiple currencies talking to each other across national boundaries? And I rather suspect that may involve some considerations of both technological and regulatory coordination in some respects, or maybe not. We're a very knowledgeable super panel to address this for us. I am going to end the panel session on the button at 5 to 4 London time, which is, please add or subtract whatever your time difference from London time is. We're currently at 5:15 London time, so I'm very pleased to kick off with Madame Valérie Fasquelle, who is Director, or maybe that should be Directrice of Infrastructures, Innovations and Payments at the Banque de France. Over to you, Valérie, the floor is yours.
Thank you very much, Philippe, and thanks as well to the colleagues in New York for having organized this very interesting discussion this afternoon. So during the first panel, I understood that there were a lot of words about the potentialities of central bank digital currency, rather, I would say, in a domestic form. So now we are back on a different territory, which is about cross-border payments. So I think this discussion we will be having is very rich and very timely, because as said before, there are a lot of initiatives around the globe about central bank digital currency. And on top of that, cross-border payments are really, for the time being, at the highest of the global agenda, with the roadmap, which has been endorsed last year by the G20. So I will not do the full story of cross-border payments, but to make it short, we all know that they are currently qualified as complex, as slow, and costly. So I won't come back lengthily on the root causes of these inefficiencies of cross-border payments. Just to recap, nevertheless, that they affect both retail and wholesale payments. And to insist on the fact that it's really, from our perspective, a multi-dimensional set of issues. So the frictions which are observed encompass a wider array of aspects, from fragmented data standards, lack of interoperability, complexity in meeting the compliance requirements, data protection purposes, and so on and so forth. So currently, what we observe is that the inefficiencies in cross-border payments constrain really the economic opportunities and the exchanges beyond the frontiers. And the lack of interoperability is really exposing to currency risk and counterparty risk. So there are lots of answers which are currently in the pipeline to mitigate these inefficiencies, to address them properly. But all in all, the fact is that we are still confronted with structural inefficiencies and that we have to deliver. So the question is, besides the impressive roadmap which has been set up by the G20, there is general question mark, which is whether central banks could play an active role in these settings. So I heard recently Benoît Cœuré saying that within the central bankers population, there were so far the thinkers and the plumbers, and possibly he was inviting the central bankers to be also innovators. So I think there is indeed a decisive role for the central banks in this field, not only as overseers of infrastructures to increase the convergence of regulatory and supervisory approaches, but also as a catalyst to stimulate and really to create a conducive environment for innovation, but also and primarily as operators and as issuer of something which is at the core of payment infrastructures, which is the settlement asset. So my first message would be this one. I think that central bankers should not be shy and should really and carefully look at central bank digital currency to help dealing with cross-border inefficiencies. And this has been flagged before. We know quite well that there are some actors that understood pretty well so far that these inefficiencies could also represent business opportunities. So there are some innovations and some proposals on the table, some of them relying on stable coins and on crypto assets for both purpose and retail use. So these initiatives brings a lot of promises for more rapid, simpler, cheaper payment solutions across the globe. The question mark is whether these initiatives are solutions only or also bring problems. And from the perspective of the central bank, of course, they could have benefits for the landscape of payments, but because these new settlement assets do not fulfill all the characteristics of fiat money, they bear various risks for the financial system, for the monetary sovereignty. They could rebuild private ecosystems that could rebuild and constitute silos of liquidity and then raise a lot of issues for financial stability and monetary policy. So the question is, what would then be the case for central bank digital currency? And I think that the major difference, I think that the previous speakers mentioned before, is that the fact is that with CBDC, you have the perfectly safe and liquid settlement asset. So, and I think that's Augustin Carstens during the BIS Innovation Summit, which is currently held these weeks, said it before, money is a matter of trust. So it means that CBDC for cross-border payments is by definition a higher guarantee in terms of settlement. And depending on the setup, CBDC network could offer near real-time settlement. Because also of the technology that might be underlying, there could be benefits for simpler interoperability. And we know that it's quite complex today to set up connection between existing systems because of legacy constraints and so on and so forth. So considering a new system based on the new technology could also be an opportunity to design more simple interoperability mechanisms and also improve transparency. And there is, by definition, because of the technology, the prospect of direct path and the ability to cut the number of intermediaries between the sender and the receiver. So saying that does not mean at all that the CBDC for cross-border payments is the solution to the problem, but probably part of the solution to this problem. So this brings me to my second point, which is that if we want to deliver efficiently in the field of the CBDC and in particular for cross-border issues, international cooperation is absolutely key. because we have to agree on common technical standards. So it means that revamping the systems, creating central bank digital currency does not necessarily is not necessarily sufficient, because we have to make sure that the central bank digital currency are interoperable by design. Otherwise, it means that history is doomed to repetition. And if we do not put a certain degree of coordination, it means that the CBDC deployment for cross-border payments will face exactly the very same hurdles as we have today. So lack of interoperability, it means that it entails complexity, these entail costs, so it will not be sufficient. So it means that we have also to adapt the legal and the policy framework, because technology is not the only issue, and it's not the only complexity of central bank digital currency, because we have, even for CBDC, to identify the legal and the policy barriers that could prevent a smooth circulation of CBDC in a cross-border context. And we have to make sure that we create the conditions of an efficient and secure finality of settlement, which is absolutely key for cross-border systems. The third element, which is important and deserving international cooperation, is the need to look at the macro financial implications of a cross-border CBDC, because as long as we go beyond the domestic boundaries and the domestic frontier, it means that this raised the question whether central bank digital currency should be allowed to be held by foreign institutions. So this has, by definition, consequences on monetary policy, on monetary sovereignty, and possibly on financial stability. So these macro financial implications should be well addressed and well identified first, prior to any issuance of cross-border CBDC. And there is also this very last point of the AML CFT standards, which here are one key and core element for cross-border payments. Central bank digital currency should really be developed in a view of streamlining, which does not mean weakening the controls by allowing rich information to circulate with the tokens and to make transactions traceable. So all these elements to introduce to illustrate the point that we are really committed to international cooperation, should we be willing to consider CBDC as a possible answer for cross-border payments. And I will pause here, ready afterwards to answer your questions. Thank you.
Well, thank you very much indeed, Valerie. That's a very good, as we say in English, tour d'horizon. I wondered, given that much of the EU is in fact a cross-border single currency zone, is that an advantage or a disadvantage in thinking through these issues with respect to cross-border CBDC?
I think it's probably an advantage, because we are already looking to a certain extent in a global way. So we made a lot of progress in establishing common standards within the Eurozone. For example, the SEPA format is already an important endeavor in this field. So to a certain extent, we are trained to be structured to look beyond the domestic borders. So I think it's primarily an advantage. Probably it's not sufficient, because the Eurozone is really something consistent with a lot of similarities. So it's not enough to look at the cross-border issue at a global level. So you cannot simply translate what works at a regional level to the global ecosystem.
Although presumably at some point the ECB will say to the international order, look, we've done one, it works, why don't you just adopt that? I'm now going to pass the baton to Rafael Auer from the apologies if I've got that wrong or right, Rafael, from the Bank for International Settlements, he's a principal economist there specializing in innovation and the digital economy. He's just been playing a major role in their thinking and the G20's thinking around the evolution of global payment systems. So an ideal man to take the debate along, Rafael. By the way, I'd observe to our panelists, if you look in the chat box, there are all kinds of interesting points and questions popping up. If you want to latch on to any of them, please do. Otherwise, I will try and field as many as possible as we go along. Rafael, over.
Thanks to Banque de France and the organizers for having me, and to Philip for the kind introduction, and to Valerie for setting the stage so nicely. Let me start that when I speak, I always speak on my own behalf and not on that of the BIS. And as Valerie pointed out, one advantage of central bank digital currencies is that they could incorporate improvements to international payments from the get-go and avoid legacy issues. And precisely because the clean slate approach is key, central banks can coordinate and cooperate, and they should do at the earliest possible state. And that is indeed the starting point of an endeavor by the G20 to improve cross-border payments, maybe also taking into account the international potential of CBDC issuance. And I'm happy to present some results of a stock take that we're doing in this regard. And our survey is actually very recent. It was carried out in the first quarter of this year. 41 central banks have so far replied to our inquiry, and there are 13 respondents from advanced economies and 28 from emerging economies. The survey is structured in two parts because cross-border payments with CBDC may essentially take place in two different ways. So for one, the role of CBDCs in cross-border payments could resemble that of cash. In theory, one can hold and use CBDCs from various jurisdictions and in different currencies. So at the retail level, we can think about like a wallet that, just like cash today, permits users to hold CBDCs from different jurisdictions. And there is a second way, which is that at the back end, there could be linkages between domestic CBDC systems, and they could form what we call multi-CBDC arrangement that foster seamless convertibility of one national CBDC into another. So let me start with the retail or front-end perspective. If we could go to the next slide. As Valerie, or as many presenters in the previous panels have already mentioned, and also Valerie touched upon, with today's cash, there's actually a lot of circulation outside the jurisdictions. We also, when it comes to CBDC, we need to think further. We need to think about, well, who actually even domestically could use the CBDC? And an obvious starting consideration is that tourists could, for example, get temporary access to a CBDC. So there is an advantage to that, in that tourists could stock up on CBDC at one point in their trip and at a competitive exchange rate, rather than being at the mercy of fees and arbitrary exchange rate that are applied in today's intermediary-based system when using a debit or a credit card. And indeed, central banks in our survey, and that is the left panel, tend to be very open to allowing for this possibility. A second option is to allow for the use of national CBDC beyond borders. So just like a dollar is frequently used outside of the USA, a CBDC could be designed to allow for this, but unlike cash, it doesn't have to, because obviously there are technological ways to limit usage to just the jurisdictions that has issued it. And central banks are proceeding with great caution here. They're not precluding this possibility, but most indicate that they would not allow use beyond borders when initially considering a CBDC design. In addition to allowing for CBDC to be accessed when traveling or abroad, CBDC could offer a new way for convenient and inexpensive access to foreign currencies for remittances, travel, or trade via backend linkages. We will see this on the next slide, the various possibilities. So we term this multi-CBDC arrangements, MCBDC arrangements. As Agustin Carstens pointed out in an important speech on last Friday, MCBDC arrangement could be a preferable alternative to global stablecoin arrangements. And generally, they are just design frameworks that include technological, market structure, or legal aspects to facilitate seamless conversion of one national CBDC into another one. Specifically, we consider three models here. A first is just enhanced compatibility. It includes any element of harmonization, similar regulatory framework, similar market practices, similar messaging formats, and data requirements. A second model is more formal. It involves some interlinking at a technical or market access framework. So for example, there could be a technical interface that allows participants to make a cross-currency payment directly through the platform from one end user to another user and using the interface. Another example could be a common clearing mechanisms that nets payments and is operated by a central agent. That could be the central bank or a designated central agent. And the third, the model 3, the most intense form of integration, includes multiple CBDCs that exist in a simple payment system. So this is important. This does not involve a global currency. It involves distinct CBDCs. They just work in a common system that shares a single rulebook and that runs on the same shared infrastructure. So we surveyed central banks regarding their current thinking on these three conceptual models, and the answer reveals that about 40% of central banks are considering one of these three models. And of those that sort of consider one of the model, the middle option, the interlinking one, is the one that's considered most frequently. So let me conclude here. I presented some preliminary findings from a survey of central banks regarding the use of CBDC across border. Central banks at the front end retail side see potential to allow visitors to temporarily access their CBDC. At the back end, wholesale level, central banks are considering a variety of MCBDC arrangements. These options include to interoperate, which means to harmonize, to interlink, which means to sort of jointly develop a bridging infrastructure, or to integrate, which means to jointly develop a common infrastructure, an entirely new system. We're still at a very early stage, and we need to sort of, as part of fostering international cooperation, we are also sort of fostering the conceptualization so that we have a better handle of how central banks can think about various models, the governance issues, the economic issues, and the technological aspects. And that is why we've also on Friday released a payment that conceptualizes this debate. And I highly recommend everyone to take a look at this paper. I stop here. Thank you very much.
Raphael, thank you very much indeed. I'm sure all of us are reaching now for our mouses or mice and downloading your paper. I certainly shall be reading it. So thank you for sharing that with us. I think it'd be good in parallel now to pass to Tobias Adrian at the IMF, because I think this provides a perfect introduction to some of the thoughts about the international financial system and where this fits in. And I know Tobias has got a hard deadline on the hour, so let me pass to you, Tobias.
Yeah, thanks very much. Thanks for the Banque de France for organizing this wonderful panel and for including me. So both Valerie and Raphael have already covered quite a bit on the policy front. So I will just highlight a couple of issues that were probably already mentioned. So I will just emphasize a couple of issues. So first of all, what is the policy goal? What are we trying to achieve in terms of international payments? And I think there are three overarching goals. Number one is access to payment systems for all. We have 7 billion inhabitants on this planet, and a vast number of people still has no access to formal payment systems other than using cash or some other barter economy type payment system. So access to payments, and that should include cross-border payments, of course, we're all aware of the importance of remittance payments for some of the poorest countries in the world. Of course, in terms of global payments, you know, this is a small fraction of overall global payments. But for those who are employed in this area, it is a source of life. And of course, the fees are particularly elevated for remittances. So this is certainly one policy objective. But more generally, cross-border payments remains expensive for a number of payment corridors. The costs have come down dramatically for like the busiest crosses. But for many other countries, we have a membership of 190 countries at the IMF. For many countries, you know, wiring money remains extremely expensive. Secondly, it should be not just cheap, but also fast. In today's world, it would seem possible that payments are done pretty much instantaneously around the world. And third, the third policy goal is safety. So we have to make sure that payments are not conducted for criminal activity, that consumers are protected, that integrity is preserved. And that is, of course, a huge challenge in systems that are potentially anonymous. So having some amount of ability of making sure that payments are you know, not used for criminal activity or so is certainly another policy goal. So those are the three main policy goals. How can this be achieved? And the important work that was kicked off last year by the G20 was already mentioned. That is called the FSB's Cross-Border Payments Committee. And it's overseen by the FSB, but there's membership of the main international financial institutions, such as the BIS, that is represented by Raphael, the IMF, which is represented by me, but also the World Bank, and a number of other institutions are represented there. And of course, the central banks of the FSB countries are represented in that. And that has laid out a strategy for the improvement of cross-border payments. And I think the very, very important philosophical approach there is that it is a multi-pronged approach, right? It is not about picking one technology over another technology in order to make cross-border payments work. The vision is that there will be many ways of making cross-border payments. And so central bank digital currencies in cross-border payment space is one way to make it work, but there are certainly others as well. And so the approach of the CPC is to really work on all of these dimensions, including the correspondent banking system and digital currencies that could be public, like CBDCs, or could be private, and of course, some forms of multilateral payments as well. You know, so what are the challenges on this one specific policy aspect, which is cross-border CBDCs? Interoperability is an obvious thing. You have to make sure that systems can talk to each other. You know, probably the most successful digital money, so not CBDC, but digital money payment system is in China, where there are, of course, two payment systems that are privately run, that are very large, that have had enormous success in terms of increasing financial inclusion, but that are totally inoperable in between each other, right? And so this is certainly not something where we want to end up globally. We would like to have payment systems that are interoperable, and that's a clear role for the public sector, is to coordinate various initiatives by the public sector, but also by private sectors to ensure interoperability. Secondly, Valerie already mentioned that dollarization would be getting that much easier if digital currencies, whether they are CBDCs or private stablecoins, are available around the world. As you know, there are many countries that are dollarized, and that is a huge challenge for those countries from a policy perspective. And digital currencies is making that that much more problematic. Secondly, many countries around the world impose capital controls, and you know, that is sort of like the only way in which these macro challenges can be addressed for the broad set of countries around the world. And so any digital currencies would have to be consistent with those capital controls. And you know, conceptually, that's just one line of code, but somebody has to make sure that that line of code is there for every country. I already talked about the identifiers. So even though we are talking, when we think about CBDCs, we typically think about a system that is token-based. Identity still has to be preserved in order to make sure that this is not used for, you know, various, you know, systems that are undermining the global monetary system from an integrity point of view. And finally, there's an excellent question in the chat by Peter Devi about the FX component. So, you know, even if say there are CBDCs, say in the Bahamas, of course, this is the only CBDC that is existing today, the sand dollar. So let's suppose that the sand dollar could be used in some form in Britain. So I go to Philip. Philip is running a shop selling newspapers or so. So I go to Philip. I say, here, I have the sand dollar, and Philip might accept that. But how is it converted into a pound CBDC? There's an FX component. Is that being settled by the central bank in Bahamas, by the Bank of England? Is there an intermediary like a CLS in between? Would CLS only cover the 14 currencies it currently covers, or the broad set of currencies that is out there? All of those are key design issues. We don't have the answers yet because we only have one digital currency, central bank digital currency, that is actually in usage at the moment in Bahamas. There are others with trials, of course, but none of them have international components at the moment. So a lot of work remains to be done. And to stop, let me just underline that money has always been a partnership between the public sector and the private sector. You know, it used to be that central banks were private sector institutions. That didn't work very well. The Bank of Amsterdam was one of the first. The Bank of England and the Riksbank, those were all central banks that became public because it's hard to run the central bank as a private institution. And on the other hand, of course, no banking system is run entirely by the government. The private sector partnership is extremely important. And so when we think about money, high-powered money, central bank money, is only a very small fraction. The vast majority of money is privately owned money or privately issued money. These are central bank deposits or savings deposits. And so thinking about this partnership between the public sector and the private sector, I think is absolutely key in thinking about the policy approach and the design of any CBDCs cross-border going forward. Let me stop.
Thank you very much indeed, Tobias. I'm afraid Philip's paper store can't sell you anything at the moment because it's shut, courtesy of my government. It's got me locked down. I think you raise a whole range of issues, in particular the legal issues that are going to surround CBDC, whereas they currently surround regular currency, whereas they're just implicit at the moment. But there's a whole element of law that still needs to be written to accompany CBDCs. I think it's important to underline the importance of migrant worker remittances. I mean, it's about $1 trillion flow worldwide. For some countries, it's absolutely seminal. At Tonga, it's 48% of GDP. Philippines, it's 10% of GDP. I mean, this has major impacts. The points you underline as well about the role in the international system of various currencies, be that the dollar, be that the euro, be that to a lesser extent the pound, the pound sterling, the yen, and probably a digital RMB. and the need overall to coordinate both from a regulatory and a technological perspective. Now, we're fortunate in that our next speaker, our next panelist, is a man who a massively important role in interpreting all of this. He's got to solve all these problems. So whilst the regulators are sitting around happily talking about regulatory issues, Manish Kohli, who is global head of payments and receivables at Citigroup, is responsible both on a retail cross-border side and indeed on a wholesale side for implementing it all. So we're delighted that he's agreed to join us and provide his perspective from one of the world's major financial institutions on what he thinks about all this. So over to you, Manish, please.
Thank you, Philip. Thank you for the generous introduction, and I want to thank the Banque de France for inviting me to share my views at this panel. So just to kind of place it in context for everybody as to where my views come from, I'm responsible for running the payments business at Citi, and we move about $4 to $5 trillion every day, a material portion of that, which is cross-border. And to do that, we have a direct presence in close to 100 countries, and we participate in 250 FMIs on a global basis. So I think maybe the first point I want to just express out over here is that in my view, as a practitioner of cross-border payments and payments globally, I do believe that the innovation that we have seen in the payments industry has not kept up to pace with the innovation of the industries that we serve. And I think it's important for us to put our hands up and acknowledge that. And the responsibility of that lies both with the private sector as well as with governments. And if you see the industries that we serve, they have moved to instantaneous experiences. They have moved to the business models have become global, while the payments industry, in a large part, has continued to rely on batch processes. Data is fragmented, our currencies are different, and there's significant friction that's there in various parts of the world, resulting in, at potential times, inefficient experiences, slow experiences, specifically when it comes to cross-border. I think on the domestic side, the payment industry has moved along much further. And again, thanks to the work that regulators have done, especially with domestic instant payments that are probably now either in various stages of development or here in more than 50 countries in the world. So that's the problem statement where we are today. Now, if you extract ourselves, and if we extract ourselves a little and say, what is the target end state? And what do we as private sector and governments, as we seek to collaborate, what should we really aim for? And my simplest way to articulate that would be the North Star that we need to kind of all point towards. And that is for us to create a world where anybody can make payments anywhere, as if there are no borders, no currencies, and no constraints in an instantaneous manner, and which is really what the future of commerce is, which is the future of services is. And if we, as an industry, are the settlement arm for those industries, our aspiration should be exactly mirroring the industries that we serve. So a future where payments can be made as if there are no borders, no currencies, and no constraints. And to do that, I think all the points that I've heard today, I mean, Valeria's point about interoperability and collaboration between private and public sector, Rafael's point about looking at innovation, including CBDCs, and Tobias' points about the three principles he laid out, I think really resonate with me. Now, I think if you go a little beyond than that and start moving and pointing towards the solution over here, I do not believe that there is a singular cure-all solution. There is no silver bullet for us to point to achieve this vision that I'm sure we will all find very hard to dispute. I think Valeria made the point that technology alone is not the solution. I just want to endorse that very, very strongly. And the form of money, whether it's fiat currency, whether it's a crypto asset with intrinsic value, whether it's a stable coin, central bank digital currency, in my mind is a component of the solution. If you look at the friction that we have and the friction that needs to be resolved for, the friction goes much beyond that. It is in the form of KYC, sanctions, FATF regulations that we have, data requirements that we have in various parts, documentation requirements that we have in many countries where regulators seek documentation to either send transactions out or receive transactions on a cross-border sense. Those are all points of friction. And any solution, however digital, will always become an analog solution if we don't take out various other parts of friction that make it actually an analog solution. So I wanted to kind of, while our conversations focus on digital currency, I wanted to kind of zoom out a little and say, our collective aspirations between private sector and public sector has to go beyond the form factor of money. It has to go through everything else that makes cross-border payments have friction. Now, I also want to say that there is reasons for all of us to feel both upbeat and optimistic. And if I look at some of the innovations and the collaborations that have happened over the last 3, 4, 5 years, that have probably, would add up to more than what we have seen in the last 25 years in terms of sheer intensity, direction, drive between the private sector as well as public sector to help make cross-border payments simpler. I think this is a point of time for us to be bold and experiment. This is a theme that I've heard, in the previous panel also, as well as in this one. An example over here is that, the experiment that the Bank of France did in terms of looking at digitization of securities and digitization of money and looking at simultaneously 24/7 settlements. I thought that's a great experiment. I would encourage all of us to either participate in those, or I would encourage all of us to look for avenues either within private sector, within public sector, or in private sector, public sector collaborations to look at it. I also think that the individual components that make a cross-border payment seamless, which is either on the messaging side, what SWIFT does, on the payment side in terms of RTGS systems and instant payment systems, I think there's enough opportunity for us to work and enhance them and start making them, improve the quality of data that we send to them, improve their availability, improve the transaction sizes, and so on and so forth, because those components all come together towards delivering a superior cross-border payment solution. Now, in the context of digital currencies, I also believe that there will not be a single solution that will emerge. We've kind of already talked about different governments having different perspectives. I think Rafael's paper study was quite, enlightening specifically to me. But I'm not surprised to see that we will have different outcomes in different countries. But one thing that is very important that I would just encourage all of us to keep in mind is that irrespective of the direction that is taken to form solutions, it's very important that these solutions are interoperable between themselves, as well as interoperable with some of the innovations and enhancements that are already happening in fiat currency infrastructure today. Because if they're not interoperable with the enhancements that are happening in fiat currency infrastructure today, with RTGS systems moving 24/7, with ISO XML standards being created, with instant payments being built and deployed, and also supporting cross-border traffic in many places, then we risk a scenario of considerable divergence between the economies and the payment flows that digital currencies will support versus what are here and now solving problems for us, and over the last 2-3 years shown a considerable benefit to economies and a considerable benefit to corporate sector. So with that, Philip, I'll just pass it back to you. Thank you.
Thank you very much indeed, Manish. That's a very interesting and wonderful agenda there for regulators and central banks and indeed technologists to start thinking about. And clearly there's an order of priority here, which is let's sort out the policy. What are we trying to achieve? Let's sort out the functionality. What does it actually look like in practice? Let's sort out then the technology as to what does the platform look like that it all operates on. And then clearly we need to decide on how interoperable it's all going to be, because some people may not wish to be interoperable. That's another question, but thank you very, very much indeed. Peter Dovey has very kindly on the chat box sent us a link to a paper on legal aspects of CBDC from the IMF. Thank you very much for that, Peter. If anybody wants it, that's where it is. And Rafael very kindly has sent us a link to his paper on multi-CBDC arrangements and the future of cross-border payments. Thank you very much indeed for that as well, Rafael, and thanks for discussing that with us. I think we have adhered to schedule, so I'd very much like to thank the panel, Valérie on behalf of the Banque de France, Tobias, Raphael and Manish. Thank you very, very much indeed for very insightful comments. Thank you to everybody else.